Warriors, hi face, how's everyone doing? I want to start off with the dollar. Yesterday when we were trading above this breakdown line, it's a weekly wedge line. Here it is. Goes all the way back to 2015. We took it out on a throw under or throw over, and then yesterday we tested it, got above it right here. I said I didn't trust it, got back inside, rallied again, this time above it, but a little weaker. To me, I'm really not impressed with the dollar. I know there's some people trying to bottom pick it. In fact, I think one more new low in the dollar is possible. I think that this turnaround Tuesday is still valid. This could be a great shorting opportunity with, say, 50-point stops, give it tolerance over this high for at least a pullback to this moving average at 89.21. Part of the reason I think that we could get a new low is the low came off such a negative momentum reading. Looks like, well, 29 on the 4-hour, very weak. Lows came in at 13 and 15. So to me, this looks like you had some divergence, but the selling pressure was so intense that on this low, we had a divergence at a 15 reading. I also think that if they could generate one more break in the dollar, that it could extend the recovery in the S&P. I want to give kudos to Blake on 2 counts. He said it was going to hold here. He had other stuff besides the 200-day here. Has a fib extension down here. And then he pretty much nailed the recovery level up to 2,700. That's where we went to, 26.99.60. Clean it up, Blake. So I think that, with some action in here, they could extend it a bit. I'm thinking 750-ish. For my next short attempt up here. So it could fail from here, but I'm going to try and be patient, look for 750 on the S&Ps. And one thing I mentioned yesterday was some of the structure on the cryptos looked pretty good. And I said, a lot of people said crypto turned down first before the market did. So I said, I think there's a chance that crypto could bounce. I said the best structure was Ethereum on an ABC, and it did put in a very nice reversal day yesterday. They all did. Bitcoin did as well. This is a weaker structure, stretched out, but I wouldn't be short Bitcoin now. Under 6,000, it has problems just like the S&P's under its 200-day, but this is back above it. And Litecoin's looking okay too, similar setup, double bottom coming out of here. Maybe this is ABC. So cryptos look good to me, so maybe we're going to have at least some type of retracement off this big decline that we've had in crypto while the S&Ps are trying to retrace 61.8 or so. The dollar, new low in the dollar, I think would be a tailwind for that to happen. That's my theory, is that markets like a weaker dollar, our markets, it supports commodity prices, oil, which is the big part of the S&P 500, just supports multinationals, making it easier for them to export. So my thesis is when, if the market takes the next dive, it'll be with a dollar rally, and that really is kind of what happened. We bottomed in the dollar before we got the sell-off in S&Ps. So those are my thoughts. Any questions for me? No sound on YouTube? Okay. Any questions for me before I pass it on to Blake? I'm thinking 27.5. I think the dollar is still a sell for one more low. And that crypto's bottomed yesterday for, at the minimum, a bear market rally. No questions? Okay, great. That means everyone understands everything I say.
Dale, how can we not understand?
All right.
Buy dollar, sell dollar, buy dollar, sell dollar, whatever.
Yeah. How are you, buddy?
Good. I'm tired this morning. I'm just kind of beat. I don't, just got up and I'm just tired. But
It's been an emotional few days.
Yeah, it really has.
I think we feel it when there's drama going on.
Yeah, that was it has been a long couple of days. Although when you were talking about the dollar, I'm going to have to disagree with you. I'm actually looking for a dollar squeeze. I don't know if it's going to happen today, but the price action is really here. Let me.
Yeah, let's see why.
I don't have a why. I wish I had a why. I don't really have.
Well, then it's into it. Maybe it's. I retweeted something by Lolly Daskell, and she talks about intuition, and I know you have traders' intuition, Blake, and sometimes.
Yeah.
And she talks about intuition is making a decision without knowing the why. It's because intuitively you feel it.
Yeah.
And you take action on it.
I think a lot of it has to do right now with positioning. I know the dollars,
okay, yeah.
the euros.
There's a why.
That's a why. Another why technically is because we have, okay, let me give you my technical reasonings, and whether it comes to fruition today or not is to be seen. But if you go over to the weekly chart, okay, this is the longer term, obviously the longer term of the euro. Right. We went from 160 to 103 or whatever the low is here, and then we hit a 38% retracement to a T. And I was wondering, are we going to get and are we going to rally above these highs and tag this downtrend line? It's still possible, but
that's what I'm thinking. But but it may not happen.
But you're thinking that, and actually I've talked to a lot of people, and they all are talking about the same thing too. So,
okay.
So the question is, do we fulfill everybody's desire?
Yeah, everyone's waiting to be accommodated at one more high.
Right.
I understand that.
Right. Okay. So now, but this week, what's more important is we broke through 124. You see this green line here? Green line was very important.
About 24 under 24 being negative Monday.
Exactly. And so what we did is we dropped below 124. We rallied back and successfully tested 124. But what we are testing right now is, see this line right here? This is the breakout point. And as long as we're above that, I can't be too bearish the euro. But with that being said, look at the price action here. We're staying below this green broken trend line. We successfully retested it. We're already back down testing it, and for no good reason. I mean, yields are going higher, I guess, and you can say, well, maybe the dollar is tracking yields again, but is that really the case? Because has the dollar been tracking yields as of late? No, it hasn't. Maybe at some point it takes hold, and we see that relationship really come to fruition again. Maybe, I guess, it's worth arguing, I guess. But the fact of the matter is we're not getting a rally, and I thought about this when I was sleeping. I guess one of the reasons why I woke up this morning, I actually had a short in the euro overnight. I took a short in Asia because I'm like, we're staying below 124. I'm going to take it, and I made like 30 pips, nothing, and it was a small position. It wasn't anything like, oh, I need to write home about this and, do a pattern and play. And, also it was just, kind of, I'll take a small position, made a few bucks when I got up this morning, fortunately. And, but I was thinking to myself, the longer we stay below 124, the more nervous anybody who's long is going to be. If you're long the euro, you're probably thinking, oh crap, man, we hit the 38% retracement. We're, you know, starting to make lower highs. I would assume at this point that, here, I'm going to grab my pen. I'm assuming right now that stops are building pretty aggressively right here. Okay, stops are starting to build really aggressively right here. And so with that being said, I think the risk now is that we move lower. And you know, I also look at, you know, I look at the equity markets and I'm like, okay, we're making a recovery in equities. We're at a, you know, this, you can see from the high here, we're above the 38% retracement. The 50% is capping us thus far. We could rally a little bit higher. So it's not equities that are moving the dollar, at least not right now. But the dollar, I still think is at risk for a short squeeze or a liquidation of euro longs, at least. And that's something that is on my mind as long as we trade below 124. When I woke up this morning, I said, okay, you know what? If we're trading at 124.50, which would be up here, I'm going to go ahead and just get out of my euro short that I had, the small position that I took overnight. I'm like, yeah, I'm just gonna, you know, no sense in being in it if I get up and we're there. I got up this morning and we were trading at 123, like I think like 55 or something, and I'm like, ooh, I'll just take that little profit because we're so close to support. And so what I did earlier in the chat room is I told everybody I reshorted the euro at 123.49, which I'm only up 9 pips right now. If you're in the chat room this morning, you already knew that I kind of put in a kind of a marker, if you will, but I really want to get aggressive below 123 and a quarter, and I think that's where stops are going to start. I think they're building there, you know. There's a couple other things that would have to happen too, in my opinion. You have the pound. The pound is a little weaker this morning, but let me go over to the daily chart. This 138.30, big level, right? It's huge, and we're just sitting there. We're holding. Okay. That's really big, in my opinion. Hold on one second. I just had to cancel something. We're sitting. Sorry, I was just reading something. One of the guys in my office made a note. He goes, the market goes up for 9 years straight. It goes down for 2 days, and margins on CME futures rise by 10%. Crazy, huh? Crazy that the CME raises futures prices like that, knowing that volatility is coming ahead. I thought that was rather interesting. Anyway, so the pound right here is really big. Support. It's going to be at 38.30, and we're inching our way towards there. We're not quite there yet, but that's also pretty important to me. If you look at some of these Nordic currencies, here's the US dollar, Norwegian krona. This US dollar, Norwegian krona, let me grab this line here. I'm going to take it and move it right over here. You can kind of see where the line in the sand, if you will, for bulls and bears, and all is all right about here. Okay, if we start taking out those highs, then we know that the US dollar, Norwegian krona posted a false breakdown, and it's going to continue to squeeze higher. We probably got a nice, you know, move here. And one last thing I want to talk about is the US dollar, Swedish krona, which, you know, oftentimes goes unnoticed, but, you know, I'm watching this thing creep up here towards 8. And we overcome 8, and the US dollar, Swedish krona, same thing as the US dollar, Norwegian krona. We post a false breakdown, and, you know, then we're going to rally. Now, here's the other thing I want to say regarding the euro dollar and the dollar in general. How far do you think, and I'm going to ask you this really quick, Dale. And if are you still listening in? I know you have it on mute, you know, every once in a while. So and maybe he stepped away. And I can ask you guys too. How far do you think we're going to go lower in the euro if we start breaking through 123? What do you guys think? How much downside do we have here in the euro? And I'm now looking at your Q&A panel, so you guys can answer me with the Q&A panel. What do you guys think? I'm not looking for a deep retracement here. For those of you that are you know, taking some whacks at the prices, I think your first stop is going to be here at 122, okay, or 122, yeah, like right around 122. That's going to be your first stop, and that's going to be probably the most aggressive buying you're going to see in the euro dollar if we come down. And the reason why I say that is because that is not only the uptrend line, which, you know, it's obvious that it is, but it's also, it prevents the euro from posting a lower low. Because if we go like this, if we drop through 123 and we hit 122, let's just say roughly, okay. Let me change the color of this line, so just to make it a little easier for you guys to see here. If we shoot, okay, if we hit that uptrend line, you notice how we're going to end up making a higher low. That if you're a bull and the euro's to stay bullish, that needs to hold, in my opinion. It's a very key component. Now, could we break and then just test this breakout point at 121? Yes, that could also happen as well. And then you could argue, well, we are making higher highs and higher lows. But I think the first stop will be 122, and frankly, that's you know, being short the euro already. And like I said, I've already got just a little position. It's nothing, you know. Even if I turn around and get a 30 pip stop, it's going to be like just giving away what I made last night. It's nothing, no big deal. It's just chump change for the size I'm trading. But if I get aggressive below 123, let's say 123 and a quarter, 123.10, 123, if I get aggressive from here to here, I'm not expecting a lot. It's not like I'm expecting the euro to drop to 115. Could the euro go to 115 over time? Sure it can. I mean, there's a lot of things that could happen, but I'm just saying for the sake of what's going to happen over the next couple of days, you know, I'm not looking for a big move. And I don't think you should be either. The trend is higher, any which way you slice it. The trend is higher. The euro is obviously higher. The dollar is weaker, and I don't think that trend is going to change. However, I do believe that the positioning is so slanted to the euro on the long side right now that I think a 100 pip stop run in the euro dollar is not out of the question, and I think is a very high probability at this point. There are a lot of people that have poor entries at this stage in the game. You got a lot of people that, you know, following the jobs report, following the ECB, you know, a lot of longs are, you know, the weak longs, the ones that are late. They're the ones that are at risk right now. They're the ones that they're like, oh crap, I chased this market higher and I bought it at 123.50. I bought it at 124. I took a big, you know, I took a $50 million position here or a $250 million position here. I bought a yard of the euro dollar at 124, and they're right now probably pretty nervous, and rightfully so. Because, you know, you have too big of a position at those prices, and you lose 100 pips and it's not going to feel good. So I'm thinking a short-term correction at this point, but I want to be here to take advantage of it. And that's why I think below 123 and a quarter, 123.10. I think it starts to open things up for some downside, and that's what I'm paying attention to at this point. I you know, can you make more? Can it drop to, like, you know, Martin says, maybe at 120.50? Yeah, it's possible, but that's what I'm thinking at this stage. Now, again, I'm going to reiterate, there are a few things that I'm really looking for here. Is I'm not looking just at the euro dollar. If you think I'm just staring at the euro dollar, I'm not. I'm thinking about other things too. I'm looking at you know, the cable and seeing how it responds while we're above this this blue line, this 120 132.30 level, which, if you guys missed it yesterday, we tagged it. I mean, this hourly shows you how important that price is. You know, we tagged it and bounced right back to this resistance zone that we've had drawn here for, you know, the last several weeks. Okay, we bounced right back to it. Okay, last couple weeks, that is, and failed there. So, but it shows you how important that is. You know, the Swissy here. This is another one that we should be watching too, actually. In the Swissy, I haven't traded the dollar Swiss in so long. I can't even tell you the last time that I traded the dollar Swiss. It's been, you know, months and months. But you know, we broke through this 194. I mean, look, we get above this 194, excuse me, like 94 and a quarter. That's going to squeeze, right? So I'm looking at this more as a dollar play. Oh, I'm going to take you to the dollar index too. Here's the US dollar Norwegian krona. Okay, again, you know, right up against the 790 level. We get above 790, and, you know, this thing's gonna squeeze. I mean, we could probably squeeze just like this, probably pretty quickly. US dollar Swedish krona, or we're nudged right up against resistance here. You know, that thing breaks out, and, you know, we'll trade right up to, you know, 811. Again, you know, the direction is down, right? It's not like it's, you know, we're trending higher. This will be just a, you know, near-term correction in a downtrend. But I think it's still possible, and you don't want to get caught on the wrong end of this if it does move, because it's going to be fast. I think I told you guys, like, a few weeks ago, I was chatting with this European from London, this European portfolio manager, and he went to this conference, and he goes, man, I'll tell you, everybody is bullish the euro. There wasn't one asset manager institution that wasn't. Everybody was like, me too, we're all getting on board. And this is when the euro was trading at, like, you know, 121, 122, just, you know, as we were coming through here a few weeks back, just at the beginning of the year. And he's like, it's scary because everybody's long, everybody's bullish. There's not one person in this, and it was a big conference. He's like, there's not one person I talk to, and it scares the crap out of me. And I'm like, yeah, you know, those are the types of things that do worry me, because, you know, they weren't the ones that were bullish down here. They're the ones that are bullish right here. And when you're, you know, so bullish at the tail end of a move, or, you know, at a mature point in the move, the risks are going to be the opposite direction, at least in the near term. I still think that, and I happen to agree with the crowd here, I think the euro is going higher. I wouldn't be surprised if we trade closer to 130 by the end of the year, but that doesn't mean that there aren't people that are poorly positioned. One last thing is, let's talk about the dollar index before I turn it over to Steve. So here's the dollar index. We hit pretty important support. So if you take okay, this is the 2014 low. You see that? This is the fib level here from that spike low before we started this epic move. We're at the 618, right? Or we at least hit it. Really damn close. I mean, within pips. Also, this last consolidation period, right? The flag, right? See this? Okay. The flag, 161% extension. When you combine a 618 and 161% extension and a 618 retracement, you've got two golden fib levels converging within pips of each other, that's going to cause a reaction. We've already seen it the last few days. You can see the dollar has bounced. And again, all we have to do here is crack above 90. We could trade up to 92, probably fast. Maybe 91 is what I initially think. It's kind of like the euro going down to 122. I think this is, the easy money here. But can we trade all the way back up towards 92 or this downtrend line? Sure. And that would be the equivalent of like the euro dollar trading down to 121, maybe a little bit lower. All right. So guys, that's right now. Those are my thoughts about the dollar. Like I said, I'm planning for a squeeze. I don't know what could cause it today. We have, I think Evans was just speaking. I mean, Dudley was just speaking or is speaking here. He's going to start speaking here shortly. But really, there's no other. We just have some Fed governors that are speaking today. We got Williams speaking a little bit later today. Nothing other than that. But these Fed governors might talk a little bit more hawkishly about inflation. Maybe they are the catalyst that spur a dollar squeeze. But there is no real data today aside from like the RBNZ that happens about 6 hours from now or 5.5 hours from now. But with that being said, Steve, I'm assuming Steve is here.
Hey, Blake.
Hey, good morning. How are you?
I'm good, mate. How have you been?
Good. Just sitting here. Like I said, I'm long very little dollars, more as dipping my toe in the water, but I'm looking for a squeeze, man.
I'm with you. I was telling the same thing yesterday that we're very close to getting a squeeze. I think that if we push a little bit higher from here, then positioning is going to do everything else without much effort. That's what I think.
Yeah, I think so too, and I think that's what we have to pay close attention to now. So,
by the way, what do you think of the fact that in Germany, I don't know if you mentioned it. I lost a couple of minutes at some point because I had a call. We had an agreement for a grand coalition in Germany, right?
Yes.
To form a government.
They're in talks though right now, right?
Yeah, but as it seems, it's going to be, it's going to be done. And at the same time, the euro is dipping lower, and even the DAX is like 1% lower so far today. Given also the fact that euro has been moving lower, which should help DAX, and the fact that things in Germany look like they're going to be just fine. Not that I had any doubt about that, to be honest. I think that it's significant that German stocks are lower, and in general we see stocks in Europe are lower today. FTSE is down, the DAX is down. Japan closed lower on the day yesterday, right? I mean, during the Asian session.
Yeah, Asian markets were actually under pressure last night.
Yeah. So I think that volatility might stay with us. Of course, not the extreme moves that we had at the beginning of the week, but I think volatility might stay with us for longer. I don't know. What do you think about that?
I do. I believe that. I think I wouldn't be surprised if today or tomorrow we start, resuming the downtrend in equities and get another leg lower. I think that, we've stabilized to a point where people are, hearing all the talking heads on CNBC, all these, portfolio managers is, oh, I bought yesterday, I'm buying again today, and blah blah blah. I'm gonna, these guys are stepping back in, but I think I actually received an email just before I got up this morning about, hey guys, take a look at the Asian markets, and I don't know if we're out of the woods just yet. The Asian markets are a little pressured. So it's funny you mention it because that's the exact email I was reading earlier this morning. So,
hey guys, also in 2015 on the devaluation of the yuan, when we came in 1,000 points lower one day, I think it was
during the summer,
in August of 2015.
Yeah.
And that's the last time we saw a 50 reading in the VIX. But within a day or two, it had given all of it back. And the VIX seems a lot stickier here than it did on that occasion, on that volatility spike.
You know, it does, Dale, and I think that probably says a lot to the fact that we are probably near, if not already had posted a near-term top in the market, and it's a much, you know, obviously a much different extension where we're at right now, and how far we are in this you know, S&P expansion point of view versus where we were back then, and I think that the markets are looking for reasons to sell here, and I think volatility is not going to give it all back, and I think volatility is probably one of those assets for those of you that trade it that you want to be buying on dips now. And I think you know, if the VIX gets down to the low 20s, you probably need to look at, you know, hedging.
I think that in a few years, when we look back,
besides the XIV guys yesterday that blew up some of these ETNs, I was told that there are also a bunch of over-the-counter, like CFD type VIX product that aren't even, you know, are in as much trouble, but you don't hear about them because they're not listed. So there's plenty of carnage from what happened there that could create a lot of redemptions. So
just by taking that into account,
factor.
imagine if the financial system in several aspects is so vulnerable that a couple of days of hard sell-off create that. Imagine what's going to happen when inevitably we get the next bear market, because there is going to be the next bear market. It might be in 6 months from now, it might be in 2 years from now, it might be in 1 month from now, but then we're not going to be talking about 2 days of sell-off. Statistically speaking, we're going to be talking about 6 months or 9 months of sell-off, right? So imagine what's going to be happening then.
I don't want to.
Yeah, indeed.
All right, guys. Well, hey, good conversations. I've got to get going and get ready for today.
Okay, Blake. Have a nice day, mate.
Bye-bye.
Blake, go kill him, buddy.
Thank you.
Hey, Steve. How are you
Dale.
today, buddy?
I'm good, my friend. Let me ask you something, because Stelios and Velo are wondering here. Do we have an interview planned for today?
No.
Ah, okay, because they couldn't find one in the calendar and they wanted to verify that that's the case. Okay.
Yeah.
So how have you been?
At the last meeting, I was told to cancel this one.
Okay, yeah, sure, it happens. So I know that we had several questions that we didn't have the time to go through yesterday. Obviously, you can please repost them, and we're going to go over them today. By the way, this is the DAX. This is where we found resistance so far. So as you see, we had an expanding triangle, or as we call them, a megaphone formation. As you see, the move lower was pretty impulsive in nature. I think there is likely one move missing down from here, and you know, as long as we hold below here, like 12,750 roughly, or even here that we retested the megaphone formation, you know, I don't see anything very bullish about the DAX. So you know, we have several areas of resistance above us, and any of them, like here or just a little bit higher where I said, or even 12,900, which was like a very, very well defined area that acted as resistance a couple of times, and after we broke above it, it acted several times as support, until we finally managed to break below it, like 3-4 trading days ago. So I think that for the DAX to reclaim the all-time highs, there are a lot of hurdles in the way, and I think there is going to be, even if we manage to go to new highs, which is a likely possibility, I don't see it being like a few day process or a very easy process to happen, because as I said, people might be selling from here, or might be selling from there, or might be selling from there. Okay, so there is a potential for somewhat of more upside, but it's not going to be easy to crack above 12,900 if we even get there before another leg lower. So be a little bit careful about that. On the other hand, if we do get the dollar squeeze, then there is a decent likelihood that that's going to support somewhat DAX, because there is obviously an inverse correlation between the euro's moves and the DAX. So as a lower euro benefits more inflows to the DAX and vice versa. I don't have much to say about the euro. I just want to show this ascending channel as well, because I've had it for a long time, and this potential ascending wedge that we broke below. So there are some elements here that point that the euro might move lower, but as Blake said, and I said it yesterday as well, this is not going to be an easy move so far. The euro seems to be well supported. Even the move to the downside is quite slow, quite overlapping. So nothing here that says yet that something impulsive is about to happen to the downside. Obviously, yesterday, as you see, we tested an area of support. It was that high. Today, so far we have an inside day. Even if we move lower from there, I think that as long as we remain above 121, which is the high that we found in September, and then we retested it, and for a few days it held at the very first few days of the year, like what was it, second, third trading day of the year. I really think that we really have no reason to be outright bearish the euro for anything more than a little correction. Now the pound has been somewhat weaker. It had a couple of weaker days actually, because it was all about these 2 days. But given the fact that it was overperforming for a large period of time, I wouldn't be that worried as well, since anyhow, even a retracement back to above 136 that we have this area would still not break the series of higher lows, which is what defines an uptrend. And of course, here you need to keep things in context. I'm talking about the medium term, right? Because if you look at the long-term trade, we have had a major breakout of this, but still, you cannot really define the long-term trend of cable as an uptrend. Quite the opposite, actually. So if we go back, let's not go a lot back. Let's go back to the pre-financial crisis. At some point, cable was trading, above 2. We had like a huge move lower. We had a period of consolidation / moving higher. Then again, a move lower. In essence, even if you look at longer term chart, the cable has been in a long-term downtrend. Of course, every downtrend, has counter-trend moves and big periods of consolidation. But, if you're talking about a long-term picture turning bullish, the cable is, something that is not easy to do. Regardless, on the short and medium term, the series of higher lows has not been broken, so we really have no serious reason to be bearish the pair. So yeah, I have a questions about metal. First of all, let me give you an update. Obviously, I still remain short the Aussie USD. To be honest, in retrospect, and I was thinking about it, but I was gaining more exposure. I should have even added to my position on the retracement we had overnight. Yeah, so I'm kind of regretting that I didn't add to it, but I'm holding short. I'm quite a lot in the money. I've already taken profits on half of my position. That's why I said that I wouldn't feel bad if I had added at the highs, because we were testing a support area turning resistance, so I could have added back to full position. On the other hand, just what was it, an hour ago or something, I took profits of the rest of my palladium short position when we reached 1,000. So I took 4% profit there. It's already like $10 lower from there. I thought it's quite a high chance that it penetrates through and moves quite a lot lower, but I went, I switched to gold, so I'm now short gold. I actually got triggered yesterday. I was looking for a retest of 1327. Sorry, for a close below 1327, and then when we retested it, I got limited in, and so far today it looks good. I would really want to see a move down to 1300 or high, 1200, like 1297, something like that. This is the area I'm looking for. I might even go short palladium again if we come back and retest this 1000 area as resistance at some point. So I'm going to be looking, since we're not getting an outright rebound from there, because I was seeing a high probability of rebounding from 1000. So if we rebound at some point and go back to 1000, I'm going to be looking to be short once again. Gold, silver, yeah. So now you know my opinion about gold, and let's have a look at silver, because you're also asking me about silver. Obviously, you know, the two of them are quite highly correlated. As you see, silver got rejected overnight. You know, you can see this as a megaphone formation, but even within that, if you see overnight, it tested like some horizontal area. Let me mark it like this. Here it is. So it came back, it tested that area overnight, right? We had like several closing lows there and got rejected, and it's moving lower once again. It's currently testing this trend line support. To me, it looks quite heavy. Personally, I prefer short gold, but I have to tell you that, you know, silver doesn't look so healthy here to me as well. I think that we should at least test the 61.8 at 1640, if not actually move lower from there. You know, we were viewing this as a possible inverted head and shoulders formation only if we broke above the neckline, because if you remember, it's been quite some time that I was bearish the metals, believing that you know, we're not done pushing to the downside. I'm a long-term bull both in silver and gold, but I'm bearish in the short term. Okay, short to medium term. So I have to tell you that I think that silver might do the move lower as well, but you know, personally, I saw more potential in gold for several reasons, and that's why I chose to have exposure there. Obviously, if you want to be short, you don't want yesterday's high to be you know, crossed. So if for some reason you want to be short silver, I think that you know, you would want to consider that place to place your stop loss. Let me see what other questions we have. Hi, would you like the trend in the Nifty 50 in India? Is now neutral bullish? What we okay, sure. We're going to have a look at the Nifty in a few minutes, Sunil. Absolutely. Let me go through them more popular first, and I'm definitely going to have a look at it. Euro yen and pound yen. Let's have a look at them. We have questions for both of them. So the euro yen, as you see, I said quite some time ago that, you know, both euro yen and pound yen remain bullish in the sense that they keep they keep posting higher lows, but on the other hand, you know, momentum is completely unimpressive for both of them. So I have to tell you that although I cannot be bearish as long as, for example, you know, this trend line is still alive here, and we keep drifting slowly higher. But on the other hand, I don't know. I mean, both these pairs make me worried that you know, the more momentum is being lost to the upside, the higher the chances that at some point they're going to snap and dump you know, quite a lot to the downside. So I personally don't want to be involved with them. I can tell you though, as I said before, that, you know, they remain in somewhat of an uptrend. So you don't have a signal yet to be short, right? So if you want to be short, for example, the euro yen, obviously you need at least a breakdown before below this ascending trend line that we have here, and then you can start considering, you know, the next area of support is going to be down at 130.3160. So if we break below there, I think that then the chances for a move lower towards there are quite high. And let's have a look at pound yen. You can see here that the situation is somewhat similar, although I think that, you know, it obviously looks worse because the pound yen is actually, as you see here, let me zoom out, is actually currently testing. Yesterday it broke below it. It then regained ground and closed above it. Today is testing it once again, this ascending trend line. And I do think that if we break below there, then, you know, there's a high probability that we're going to be moving lower towards at least the 147.70 area once again. So we had said some time ago as well, as you saw, we draw it there, that, you know, we can retest this area and push higher once again. But I said that this looks to me like an ascending wedge, and the implication in the medium to longer term are probably bearish. So, you know, we remain in an uptrend, but for me, it's also unconvincing, right? So I would be quite worried being long these two. Although, you know, from a theoretical standpoint, they remain in an uptrend. Something doesn't smell right with them, right? So, you know, I would really be cautious if I was you. Aussie Kiwi, absolutely. We had a look at it yesterday, and we said that it's approaching, yeah, here it is. We got to the next area of support. You can see it here, right? But the fact that we broke below this, you know, very key area of 1082, 1085 is definitely a bearish development. So I think that despite the fact that if you look at the longer term picture, we remain in essence range bound in a very large range. In the short term, I think that you should be looking lower as long as this area is holding as resistance. So for example, if we get a retest of this area, I expect that there is a very high probability that we're going to get rejected and push to the downside. So personally, as long as we remain below here, let's say 1085, I would definitely favor Kiwi over Aussie. So if I wanted to be short one of the two, I would choose to be short the Aussie. And if I wanted to be long one of the two, I would definitely choose to be long the Kiwi, as long as we remain below 1085. Okay, I'm not looking to outright trade this pair, but, you know, I'm monitoring it closely. So as I said, I know what my favorite pick would be. So for example, I've been short the Aussie, and I'm not short the Kiwi, right? And the fact that we're moving lower in the Aussie Kiwi makes me feel better about my preferred choice of being short the Aussie against, you know, and not the Kiwi. Pound Kiwi, Euro Kiwi, Pound Aussie, Pound. Okay, let's have a look at all of the crosses, since you like them so much. Let's start with the Euro crosses, Euro Aussie and Euro Kiwi. Okay, we had the head and shoulders formation, the inverted head and shoulders formation. We hit the target and we got rejected. But this just looks to me like a short-term rejection and more like a pennant, a bull flag of some kind. So I would say that I see absolutely no sign here that this pair is not about to resume its upside move after a short period of consolidation or a little correction even down towards 155.75. Okay, so Euro Aussie looks very healthy to me. Euro Kiwi not that good as Euro Aussie. So once again, if I wanted to be long one of the two, my preferred choice between the two of them, for reasons I also explained before, would be definitely the Euro Aussie, because I expect the Aussie to be weaker than the Kiwi. Regardless, we've had this inverted head and shoulders formation here as well. We haven't had much follow through, but definitely as long as this ascending channel is holding, I cannot be bearish, right? So we had drawn the possibility that we get a rejection from there. We did get a rejection from there, but I said that, you know, if we move above it, then we're going to new highs. But even if we get rejected from there, to confirm that we're moving lower, we definitely need to break below, let's say, 167. Okay, until that happens, you need to remain neutral to bullish, given the fact that we have been in an uptrend. Anyhow, between the two of them, obviously the preferred choice for being long is the euros. No questions asked. I explained why. Let's go to pound Aussie and pound Kiwi. Same situation here. We had an inverted head and shoulders formation. I've drawn it on the 4-hour chart. It's not so clear here. We moved higher. As you see, this has been very technical. Moved higher, found the resistance area, moved lower, found the support area. These were drawn before all that happened, right? We penetrated through it. We came down. We retested the same area support. For now, it seems to be working. That's what we drew several days ago, that we might move lower and find support there and move higher. So let's see if that happens, but it looks good to me. I mean, I think that if we hold here, a push to new highs is, more or less inevitable. And obviously, pound Kiwi is not going to look that good for the reasons we mentioned, but still, here as well, I would have to say that I would remain neutral to bullish, simply because we are still above this broken trend line resistance. We retested this as support. This has the potential of being like a long-term bottoming pattern, and as long as we remain above it, I cannot really be bearish. But regardless, if you want to be long, pound Aussie, a much better choice, right? Thank you, Abdul. Short Euro Aussie, yeah, long, you said. Yeah, you got confused. Yeah, if I had to choose to be long one of them, yeah, definitely it would be Euro Aussie. I think between the four of them, Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, by far the best looking one to the upside is Euro Aussie. Absolutely. Yeah, I do visit London on occasion. My best man has a house there anyhow, so for me it's just paying an airplane ticket. So the only reason I'm not visiting more often is due to having a young child and wife and a lot of obligations. Otherwise, I would be a lot more in London than I am. That's good to hear. What was he lecturing? What was the topic? And what's his name, by the way? I might know him. Okay, so philosophy, yeah, makes sense. Okay, makes sense. Koutsubakis. Okay, no, I don't know him. Interesting to know. Dimitris Koutsubakis, okay. Eurocad, yeah, we had a question about Eurocad as well. And since we're looking at all the crosses, let's have a look at Eurocad and PoundCad. Okay, this is what we were looking for in the Eurocad. Potentially we might get even a pullback, but obviously we remain in an expanding triangle that is definitely bullish for now. So I think that Eurocad might even correct a little bit lower towards 153.50, but can ultimately push to the 161.8 of this corrective move lower at 157.70. So I think it looks decently good for now. Wouldn't be my preferred choice. I mean, I wouldn't actually be trading it, I have to be honest with that. But if you're looking to trade it, it still looks okay to the upside. PoundCAD also looks good in the short term as well. Keep in mind, though, that we're testing resistance. But on the other hand, if you want a bullish argument, for the time being, this looks like a triangle to me. And triangles are formations that in the vast majority of the cases break to the the direction of the trend. In this case, it would be to the upside. So as long as this triangle holds and you see a move above it, I think that, for example, if we want to put it here in terms of trading, if you see a move above here, I think that being long for another leg higher and placing your stop loss here is a good trade. I mean, it's a high probability decent reward to risk ratio trade. Okay, this is more or less the method I follow to enter Palladium, because more or less, I mean, the context is the same, and I'm going to explain why. I wanted confirmation with Palladium. By the way, silver is breaking down as we speak. So this is a short-term trend following thing. So I was expecting a reversal for Palladium for quite some time. We had the break lower. You know, we broke below this channel. And although the move was in the short term quite mature, I waited for the rebound because I knew we had the 50 DMA here, we had that trend line there, this trend line here. And I saw that the next candle of this reversal was quite a weak one. So I went short, and you know, initially I had a stop loss above there, thinking that this is a short-term consolidation to a larger move that's going to unfold to the downside. So you know, the whole concept here and the whole idea was place a stop loss there and be looking for a move here, right? And on a break below here, I even have more confirmation. So you know, so I entered there. I was very lucky because I got at no point out of the money for more like than, you know, a negligible amount, but it could have moved higher, right? And this is how I traded this. So it's the same concept with a triangle. This was not a triangle. This was like a short-term pennant, but it's the same kind of concept. I mean, you see a formation. You see a formation if we go down to the 4-hour chart. Let's go. You see a formation that is likely a continuation formation, right? And the triangle is a continuation formation. And you say, okay, this looks to me like a textbook continuation formation, right? So if that's the case, you know, I put my stop loss, I go short in this case, or long in that case, and look for the move to resume, because, you know, this move does not look like it's done, right? So in the short term, this is simply trend following. Of course, that's why you need to be able to distinguish between different time frames, because somebody will tell you, but dude, you know, this thing has been in bullish mode for so long. Yes, but in the short term, the trend was lower, right? So as long as you're not looking for 2 months of a trade, because if I was looking to be short for 2 months in such an uptrend, you know, I would have a huge chance of being wrong, right? But looking to be short in the short term after that move was actually following the short-term trend. Abdul, I'm going to send you my email now, by the way, since you asked. There you go. Okay, the Nifty. Yeah, we owe to our friend Sunil a chart of the Nifty. Let me see what other questions we have first. Okay, so let's have a look at it. Okay, listen, first of all, this is the last time we spoke, we were mentioning that this move is extremely bullish, but there was an obvious momentum loss. You see, that's why I had drawn, you know, this this line to show that. And then what do we get? We get an acceleration to the upside, but that acceleration proved to be terminal, right? Because then after that, we get like a sharp move lower. Now, good news and bad news here. First of all, do we remain in an uptrend? Absolutely. Absolutely. I mean, even this low here was a higher low, right? There's no question about that. So we hold this low, it looks good. But this is a very sharp move. So I would really be looking to short a rebound from there because I see that a retest of this area is quite likely before moving higher. So in the long term, do we remain in an uptrend in the Nifty? Yeah, we do. In the short term, would I be long here? I would have much trouble doing that. I would have much trouble doing that. I would feel much better being short if, for example, let's say we fib this, okay? Let's say we fib this. Okay, now let's say we have a move back to 61.8. We get rejected from there. And we move like somewhere there. And then we form some kind of nice bottom here. You know, I would be looking, I would be feeling much more comfortable being long somewhere there for another leg to the upside, because I think this is, you know, quite a mature bull trend. And I believe that after we saw this sharp move lower, it's a very little time to correct for me to be persuaded. So we did correct significantly lower on one hand, but on the other hand, I don't think we corrected enough in time. So, you know, in price, somebody might say, okay, it's enough, you know, for an uptrend, etc. But I don't feel that we corrected enough in time. So I would feel much better if I saw at least one more leg to the downside, Sunil. Okay, that's what I think about the Nifty. Yeah, Sunil. Yeah, my pleasure, my friend. Okay, Dale. So
all right,
we wrap it up today.
Great look at the board. Great look at the board as usual by Steve Volge, Blake Morrow. And if you can't get enough of them, which most traders can't,
by the way,
you gotta join. You gotta get into the private chat room. Volge helped people with that decline in equities, which was fairly historic, you know, and Blake shows his charts. So if this is not enough, and I don't think it is, because we've seen no major moves in this session, show them the chat room, Steve, where they need to be.
Absolutely.
After we close this down today, because right now you'd be getting an interview. So, you know, we have 100 people in there supporting you, sharing ideas all the time. Okay. So this way you're part of a community. We couldn't make everything free. You know, we have families, we have mortgages, and you can, even during the trial, you can check it out as an observer or a 1 month subscription. Absolutely. But if you want to participate, which is going to make you better, am I correct, Steve? It's still 6 months to be a participant in this room.
Yes, you get immediate access no matter what for reading content. You also get the ability to outright participate by writing, etc. If you get a semi-annual or annual subscription. And you get the ability to write in even if you're on a month-to-month subscription after you complete 5 months being with us. Yeah. You know, we use that as a filter to make sure, you know, we have a very, very healthy community. More than 100 people during peak hours are concurrently logged in.
So let's just take an example of Blake's negative take and Steve's negative take on Euro right here. What if things change in an hour? The people in the chat room or subscribers will get an alert. Perhaps there'll be a pattern in play that's going to happen outside of the free seminars, webinars hours. So invest in yourself. If this is something you want to do seriously, even if it's a second way of you trying to generate revenue for yourself and you still have a job, you need to invest in your trading future. And I've been around, and you know, you'd have to go to a lot of different websites to get all the different methodologies that you're getting here in one. harmonics and Elliott, candlestick, macro, conventional, and they're all real talented people providing that research. So it's a great value, in my extremely accurate and humble opinion. I have a great guest tomorrow.
Who do we have tomorrow?
I think his name's, he runs a gold fund, so I'm just looking here. It's Brett Johnson at San Diego AU Fund. So, you know, the metals have been under pressure. I know, like Peter Goodburn said, he was looking for maybe an entry around 1310 in the gold. We're not there yet, but it could be a great time to hear about different ways to at least have part of your portfolio in gold. I know that most of the guys in here are long-term gold bulls, although they trade it on both sides. So going to be a great interview tomorrow. Will be live streamed on investing.com if you want to watch it from there.
And I think Greg is going to be with us as well. Dale.
Okay, the Wizard of Wizard of Ways will.
Yep.
We'll get things clarified on whether this was 5 waves down in the indices and where his head's at on currency as well. So everyone enjoy the rest of your day. Thank you for your attention. And above all, don't just count your pips. Count your blessings. All right.
Thank you, Dale.
All right, Steve. Great job. See everyone tomorrow. Enjoy and trade small and let your trades breathe. Adios.